Hi friends, and welcome back to the channel. Today I want to talk to you about my renewed investment strategy. Now, I've been investing for a number of years now, and through these years my investment strategy definitely has changed. And in this channel I really want to talk about this very openly and honestly, because I'm never saying I'm an investing guru who knows it all, and I think nobody really does know it all, right? Because investing is so dynamic, it constantly changes, it evolves over time, and I think we just have to be honest to ourselves and also go with the time. So in this video, I want to kind of reflect on some of the ways that I used to invest in the past, the reasons why I've changed, and of course, what is my new 3-pillar investment strategy going forward. So hopefully it will be interesting for you and will also help you to make your own decisions in order to obviously optimize your money that is working for you. That's the whole point of investing. It's not about who's right, who's wrong. Some people said in the comments, but Kai, some time ago you said you're investing that way, now we're changing that way. Again, I'm just giving some ideas, I'm sharing what I'm doing. I just want you to kind of get the best out of it, maybe avoid the mistakes I'm making, so you can really make your money work for you in the best possible way. And that's what I'm trying to do as well. That's why I'm shifting, because I believe the new strategy is better than my old one, right? Otherwise I wouldn't change. At the same time, I also want to be honest to myself. Why should I stick with a strategy that is not really yielding the best returns for me just because I said I will? And that's what I call a smart investor who learns from their mistakes and evolves over time. Hence the name of the channel, I guess. Right, and some of you have been watching me maybe for a couple of years now. And in the beginning, like many of you probably started by buying individual shares that I heard about in the news, or somebody said, you should be buying this and this stock. And I did that even through Revolut in the beginning, which now I really don't recommend to do anymore. But still, I did it. I learned my lessons. Yes, a lot of them did make some money, but also a lot of them lost me some money. So in the end, I learned my lesson and I realized that was really not for me. Then later on, I discovered dividend investing for me. And I honestly really enjoyed it. Seeing my dividends, growing month after month with every video I put it out. A lot of you guys loved it as well. And I think it has something really satisfying to it to see your dividend income, your passive income grow over time, right? I still enjoy it. I mean, I'll come to this in a second, through some of my investments, make some dividend income, and I absolutely love it. It's great, but it can't be the sole focus of your investment journey, because now, many years later on, I come to realize, for me, what's really most important in investing is the total return. There are different components of any investment, right? Some investments like real estate, you have the capital appreciation, maybe tax benefits, the cash income from your rent, so different components. So ultimately, as an investor, you want to look at a total picture, not just as one part, right? If I only looked at the rent I get for the apartment, but the apartment itself is in a bad neighborhood that actually loses in value, then there isn't really a point of me making an investment, because overall my investments will not really work for me. And that's really one of the biggest things I learned over the years, to look at total returns. Ultimately, you want to see your net worth grow over time, and that's what it's all about. And that was actually one of the biggest change which led me towards becoming an ETF investor, or at least putting some of my money towards ETF investments, because that's a really passive way to grow your money without me having to spend countless of hours towards stock research, trying to find companies that are undervalued and so forth. And well, while that would make for good content to present you every week the greatest stocks you should be buying, ultimately I want to be very honest and open and transparent. That's why I eventually shifted from stocks and dividend shares and consolidating all of it into my S&P 500 holding. Now I have one ETF. I don't have to worry about anymore which sectors is doing well or not, because naturally over time, the strongest companies will be at the top. They are weighted. Therefore, I will be benefiting from whoever is at the top at the time. And it's just such an easy way to grow my wealth over time. Yes, there won't be crazy returns, right? I mean, on average, you could say anywhere from 8 to 10% year on year over the last 30 years was the return of the S&P 500. Of course, there will be years where the stocks will drop, but long term, I know my growth will be solid, my returns will be good, and I'm happy with this, right? Because I don't have to spend much time researching them. And while you will find maybe some winners sometimes, a lot of the investors who make those videos, they don't tell you the biggest losers, and those losers can actually wipe out all your gains you made with some other stocks. Yes, it's great if you invested in Nvidia 5 years ago. I'm sure you made great returns. But a lot of those people, they didn't put all their money into Nvidia, maybe some of it. A lot of the other funds went into some other underperforming shares. So overall, in the end, might reach the returns of the S&P 500, in many cases actually underperforming. Even like many mutual professional funds underperforming the S&P 500. So for me, I'm not making any illusion that I'm the greatest investor that ever lived. Definitely not. I want to set it and forget it, automate my investments, and that's really the base pillar of my investments, the first pillar, so to say, out of 3. which I invest every single week some money into it to see it grow over time. I still get some dividends from it, which is great. It's a low percentage, 1.3% or so, but still it's nice to have. At the same time, I know my capital is actually growing in my favor. And for me, that really allows me to sleep peacefully at night. And at the same time, I have more time that I can spend instead towards revenue generating activities, right? Because I want to earn more so I can invest more. Because think about it, if you earn very little, you have to take much higher risk to get a higher return in order to, live comfortably from it, right? So in my eyes, I rather focus on earning more and then investing it conservatively, so I know I won't be losing all my money, but instead grow it slowly over time. And yeah, that just works for me. With this, we move to the second part of my investment strategy, and that's my real estate holding. I have some real estate in Dubai, and now recently together with my wife, we bought an apartment over here in Vilnius, but that's probably more for personal use. The ones in Dubai are actually rented out. And yeah, this for me is really amazing because there I have two great components that I as an investor can really benefit from. The first one, of course, is the capital appreciation, right? Over time, I see the value of those apartments going up, which they have already, because there's more influx, there's more people moving to Dubai, and overall the city is growing, there's demand for housing, and while they're building like crazy, the city is also growing like crazy, and therefore me as an investor is benefiting from a rise in the prices of those apartments, because actually I bought them really cheap at the time. When I bought them, there was literally nothing around, and then that was a bit of a gamble. Some people say risky, but now I've seen already really nice gains from that. And the second component, which I really like, and again goes back to my love for dividends, is the rent I get, right? So some people say that's the equivalent of a dividend just in the form of rent for real estate. And that's really nice because that way I get cash flow in the form of cash through the rent. Sorry guys, I gotta go inside. It's so hot outside. But yes, basically what I was saying, the rent I'm getting from those apartments, very similar to the dividends I used to be getting from my shares, right? That's really amazing. Now, there aren't really any tax benefits as I'm already registered in Dubai, so there won't be any tax on that. But in many other parts of the world, you can actually also benefit from tax benefits they can write off against your tax bill at the end of the year. So that's another great component. Because ultimately, if all the markets crash and everything goes down, we might be in a big recession for a number of years. Who knows, right? We've seen this in the past and it can happen again. With my ETF holdings, if it goes down for a few years, I'm fine with it. I will just hold on and not sell it. However, with my real estate, worst case, if everything else goes down, my business goes down, what have you, YouTube disappears overnight, all these things can happen, right? You never know. Worst case, I can always move into my own apartments, have a roof over my head, and just look to find some food. And that's fine. And that gives me really that comfort level. And that's why I definitely always want to make real estate a solid part of my portfolio. Of course, in monetary value right now, it's probably the biggest amount as a percentage. If I consider my total portfolio, naturally, real estate is the biggest share of it because, of course, apartments take a lot of money, right? While with my S&P 500 holdings, I'm dollar cost averaging into it. Here, you take a lump sum that you saved up over time and then invest it all in one go. Maybe some people finance, but luckily in Dubai, there's some great financing options through the developer where you don't actually have to take a loan, which I also didn't do. So that's why I also really benefited from not having to pay interest on any loan. And that really helped me to even further grow my net worth. So real estate will definitely be a core pillar of my investment strategy going forward. I don't think there's a scenario where I won't have any real estate. At the very least, I will always have my own real estate. I think to have one apartment or house, I think it's just so much nicer than having to pay rent for it. But I also understand, especially for younger people, renting might be actually a better way because A, you don't know where you're going to be living. You might be living every 2 years to a different country, so it doesn't really make sense for you. Plus, of course, it is very capital intensive. So usually when you're starting off your career, obviously you earn less, you want to put it aside. And that's why I recommend put it in an index fund, start accumulating, and then later on you can use that money to have potentially for a mortgage down payment and then start buying your own apartment. But again, there's no must, there's no right or wrong. It's just something that works for me. And I'll definitely continue investing into real estate. Right, that brings me to my last and third pillar of my investment strategy, and that's my crypto exposure. Obviously, the first two are a little bit more conservative. S&P 500, that's probably as conservative as it gets for any investment. And then you have real estate, which depends where you buy it, but overall, definitely also rather conservative. That's something people have been investing in for many, many, many years. Rather conservative, I would say. The last one is crypto, which people either love or hate, which is so strange because investments should be really looked at objectively, right? Do you understand it? Does it make sense? And do you see future potential? And when I looked at it and obviously read a lot of books about it, really listened to some experts in the industry, I really got the message, and I really can imagine a period in the future where crypto will be a major part of anyone's portfolio. I remember just a few years ago, people said, not more than 1, maximum 5% of your total net worth should be committed towards Bitcoin. And that's the main crypto that I'm holding. Obviously, there are many different cryptocurrency coins out there, but I'm really a Bitcoin maximalist, I would say, who only invests into Bitcoin for better or for worse. But that's what I understand. That's what I like. And I can see a scenario in the future there will be less money flowing into gold and actually will be shifted more into Bitcoin. But that's maybe a topic for another video. But I'm really happy that now we have the big players like BlackRock, for example, entering the Bitcoin space as well, now with Ethereum ETF as well. So it's becoming more and more popular, even with institutional money even flowing into it. So I can't see a scenario where it completely disappears overnight. Now, granted, it is much more volatile than the previous two investment classes that I invest in. I understand that. But at the same time, there's also a higher potential upside, right? While it does swing, volatility can go either way. Potentially, I would definitely see it at a much higher value 5 or 10 years from now than it is today. Right now, my position in Bitcoin is actually more than it is in S&P 500. So you could say it's definitely very risky, but at the same time, I will continue increasing my S&P holding. Long term, I want this to be at a similar level, but actually at the same time, my Bitcoin holding just grew so much. It's not just that I put more money, but it also grew faster than the S&P 500. So that's why I have it to have a bit more potential upside in the future from my Bitcoin holdings. And I think with those three together, I can really benefit from conservative investing through the S&P 500, my real estate investment, which is always going to be there. Worst case, it provides me a home to sleep in. In the meantime, I benefit from capital appreciation and rental income over time. And lastly, for hopefully capitalizing from higher returns in the future, my Bitcoin holding will be there that potentially will provide a nice return 5, 10, 15 years from now. So I'm not planning to sell this. Even we will be seeing dips along the way, I have no doubts. But long term, I'm really sure with all the things that are going on, with all the money flowing into it, institutional money and so forth, I'm really bullish that definitely that will be a worthwhile investment. Now, of course, nothing ever comes without risk, right? A lot of people have been saying, why you only invest into the S&P 500? That's only focusing on the US. What happens if the US goes down? Personally, I just don't see a scenario where the US starts dropping massively while all the other countries in Europe, Middle East and Asia start absolutely booming, right? I just don't see that. If we see the US dropping massively with a massive correction, which can happen, I'm prepared for that, I think it will be globally affected. So I just don't see a scenario where one outperforms the other, especially outperforming the US long term. I just don't see that. Again, maybe I'm wrong. If I start seeing trends of that, then maybe I will reposition myself, as I said. But overall, I'm really bullish on the US long term. I mean, if it's AI or any other future industry that will be popping up, I think I'll be benefiting from that. Same with real estate, right? Of course, if we start seeing, global wars in the regions we invest in, sure, that will definitely impact my investments. Definitely, it's something to consider, and that's why some people may not like, investing into real estate. I totally get it. But right now, especially in Dubai, I think my investments is definitely safe. But of course, again, long term, maybe I will also shift my funds to another place. Who knows, right? So I will definitely remain flexible on that. And lastly, with Bitcoin, as I said, I'm really reading a lot of things about it. I keep up with the latest news developments, and people say, the US elections might swing the price either way. But honestly, I look way beyond that. I'm not looking at 4 years, one US president, what the impact will be. I really look 5, 10, 15 years. I just can't see a scenario where Bitcoin will disappear. But of course, there are a lot of potential risks, but that's why you also have a potentially higher upside. Any investments is always a question of risk versus reward, right? But ultimately, when I look into my investment journey, I'm really happy with my evolution over time, and hopefully it also resonates with some of you. I've seen some of you guys writing me in the beginning, really being excited about dividend investing, and now also shifted towards becoming ETF investors. And again, by no means do I want to influence you. You have to make your own decision. On this channel, I'm just sharing my own journey, so to say, and what I'm doing. But with this 3-pillar investment strategy that I have right now, I feel really confident and I'm really prepared for the coming years. But at the same time, as I said, I want to keep an open eye, check the market, see what's going on. And if I see for any of those really massive red flags or warning signs, and I have no issue if I had to sell any of those and pivot into another investment class, I will certainly do that. Ultimately, I'm only accountable to myself and have to make sure I'm maximizing my money in the smartest, best possible way. And if that means pivoting from one investment class to another, so be it, just like I did with my dividend investments recently. All right, friends, I hope you enjoyed this video. Let me know any questions that you have down in the comments below. I'll get back to every single one of you. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.